Hello everyone, welcome to Upside Down Data. Today I wanted to introduce a new model that we created here to try to account for when an asset likely has more downside potential in its price action, when it could fall further, versus when it has more upside potential, when it might be rising quite a bit over into the near future. And so the model that we created we have called the Upside Downside Potential Indicator, or UDPI for short. And as I mentioned, it's really trying to capture this idea of risk reward. When is it a particularly risky time to be buying a given asset versus when might the potential reward be quite high for buying that asset? So today I want to talk about this model as it relates to Bitcoin. So the graph you see here is the price of Bitcoin in logarithmic form, and the color of the dots corresponds to the UDPI level at that given point in time. And so the UDPI ranges from -5 to 5, and a score of -5 means that the upside potential far outweighs the downside potential of the price movement in that given time. And 5 corresponds to when the downside potential far outweighs the upside potential at that given point in time. So if we go and we look at the graph and we look at the history of Bitcoin and how the model has predicts these moves in the past, what we see is that it does a pretty good job of calling out these tops or inner cycle tops, and then also calling out these cycle bottoms, these bear markets, bottom of these bear markets, as being potentially very high upside potential but low downside. And then of course these tops would be points where the upside potential is quite low and the downside potential is quite high. And so you can imagine that if again, none of this is financial advice of course, but if one were to be buying in these green and especially these dark green areas and then selling at these red points up here, one would likely do quite well. One would likely be able to maximize their return on investment in Bitcoin. So let me show you what the UDPI output looks like, just graphed over time. So this is the just raw UDPI output across time, and I've left the color coding here as well, though it just corresponds to these levels that you see here on the y-axis, so ranging from -5 to 5. And what you see is that over time there are these points where the UDPI really spikes. So there are these spikes that you see that really shoot up. And historically what generally has been the case is that on market cycle peaks, so this is the 2011 peak, this is the peak in December 2013, and this is the peak that occurred in December of 2017, what you'll see is that once the UDPI gets above about a level of 4, that tends to be when things are getting quite scary in the market. That's when the downside potential is far outweighing the upside potential. And then shortly after that, in that ballpark is when the peak happens, and then a big sell-off will happen, a big crash. Now it is interesting to look over here at this this 2021 local top that we had. Not clear yet if it's the actual market cycle top, but it was at least a local top. What you'll see is actually the UDPI was actually spiking a bit before the actual top. So the actual top occurred on April 13th of 2021, but the UDPI actually spiked back in February at the local top back then when we hit about 58K. And so one way of thinking about this, the way that I interpret this, is that the UDPI is a bit of a leading indicator, or it can be a bit of a leading indicator. It was really just warning us at the time that the market was getting really overheated, that there was things were moving way too quickly. It wasn't likely that things could continue like that for very long, and indeed that's what we saw. So, you know, come May, we got that huge sell-off down into the summer. What I think is also useful is to look at kind of more recent history, is that this model did do a pretty great job also of calling out the summer as being a particularly a point where there was pretty low downside potential and quite high upside potential. And so, again, not financial advice, but if one was following this model, one might have bought quite heavily here in the summer and then done quite well. You know, this was down around 30K. We're now up, you know, pushing 58K. We're quite far away from where we were back in the summer. So that's what the model is and the output that it generates. So what I want to move into next is how might we actually use this in an effective way. Again, not financial advice, but theoretically, if one were to actually use this information, how might one think about doing so? So one way that you could think about it is just taking this 0 point, this middle point, and saying that anything, if the UDPI is above that level, it might mean that it's that Bitcoin's more in the sell range, that you'd probably, if anything, wanting to be selling Bitcoin. And if it's below the 0 point, it might suggest that you might want to be buying Bitcoin at that period. And you could just use that as just kind of a simple heuristic. So if the UDPI is negative, then buy, and if it's positive, then sell. And you could do that with a dollar cost averaging approach, where you're just averaging in buys across those time points. But you might actually be able to maximize your return on investment a little bit better if you use kind of a weighted DCAing strategy. And so what you could do is you could set up kind of cutoff points. So I've set these up at the -1, -2, -3, and -4 points. You could, one could theoretically choose any points that they wanted to throughout this range. And you could say that, I'll buy some Bitcoin when maybe I'm between the 0 and -1 in the UDPI. And maybe I'll buy a bit more. I'll DCA in a bit more. I'll average in a little bit more when we're down here between -1 and -2. And then maybe I would DCA even more if I'm down between -2 and -3, so on and so forth, all the way down to the bottom. And you could use a similar approach, or one could use a similar approach for selling. So once the UDPI is above 0, maybe you take a little bit of profits. Once we pass above 1, take some more profits, average out some more profits once we get between 2 and 3, average out even more profits once we get between 3 and 4, and then maybe really heavily sell once you get above that 4 range. And of course, one could set this up any way they want to. One could decide to only buy between maybe the -2 and -5 range, and then only sell above 2 on the UDPI. One could take a more aggressive strategy. Instead of using 0 as this determination between buy and sell, one could actually maybe use 1 as that cutoff, and so one could DCA in below 1, and then just increasing amounts as you get further down from 1. And then one might maybe only sell once one gets above 2 into these bands, and then just DCA out more and more heavily as the UDPI increases. And so, again, not financial advice, but this is one way that this kind of indicator can be useful, is that you can use it as a basis of some kind of a weighted DCA strategy that could potentially increase the ROI rather than just buying and holding the asset. So the final thing that I want to touch on here in this video, so this is what the UDPI is, how it kind of performs over history, how one could potentially use it. I want to talk a little bit about what it says about the current state of the Bitcoin market and just insights we might be able to glean from this model. So here I'm showing the current UDPI level as I record this on October 14th. And it's sitting here at a value of 0.52. And so what this means is that the UDPI is suggesting that there is slightly more downside potential than upside, but it's not that uneven. It's a relatively even mix. And so really what it's suggesting is that assuming we are in a bull market, which everything kind of looks like we are, it means that Bitcoin still has quite a far way to run before it would really get kind of scary, before the downside potential would really start to outweigh the upside potential. And so if we are about to head into a bull run, there's quite a lot of leeway for Bitcoin to run potentially if we take what this model is saying as being true. Now, of course, anything could happen. We have no idea what's going to happen. Bitcoin could crash tomorrow. Bitcoin could go nuts tomorrow. We have no idea. So none of this is a guarantee. But that is just the way that this value would be interpreted. That's what this model is suggesting. So again, none of this is financial advice. Do your own research. But this I just think is an interesting data point here. All right, well, thank you so much for checking out this video on the UDPI and Bitcoin. Remember to please subscribe and turn on notifications. We're going to be putting out a lot more videos in the coming days and months applying the UDPI to additional assets besides Bitcoin, so Ethereum and other assets, as well as regular updates on Bitcoin and the UDPI level and what it might tell us about the current state of the market. And just remember that with the UDPI, we're all going to make it.